So I think it's, we're at a point now where it's clear that the Fed is going to cut next week. And it's an important meeting because it's probably, in my view, the last cut of the cycle, at least for a while. They're probably going to be on an extended pause, in my opinion, because of a number of factors.
Let's talk about that because, hey, that's pretty controversial, especially if you're the president of the United States, yes. Donald Trump, listening to this podcast. You're going to say, I don't think so, Dustin. Reid, you should see who I've got coming in.
That's right.
In 2026.
That's right.
Wants rate cuts. And the market, I'm sorry, is leaning into this idea.
That's right.
We are not done in December. So why do you say that we are?
So it's a real fight. It's a fight, I think, between where they want policy to go, almost come what may, versus what I think is the underlying fundamental data and structure. U.S. economy, I think, is doing quite well. Yes, it's K-shaped economy, but overall, it's quite constructive. Q3 is probably going to print at 4% real GDP. It's very strong. And obviously, there was a U.S. government shutdown, and that probably took a little bit away from the beginning of Q4. But I do think that we're going to continue to see the data pop back here as everybody kind of gets back to work. We've obviously been in a bit of a data, deluge and haven't really seen a ton of stuff over the last little bit. That will change. But the data is going to be weak for a bit. But once we get into Q1 next year, it's going to be pretty constructive. Inflation is not coming lower. Inflation is sticking around 3%, right? The labor market's cooler than the inflation market for sure. The labor market is clearly cooling, but the inflation side is pretty hot. And when you look at what's likely to come through in terms of additional tariff pass through that hasn't happened yet, we're likely to see more inflation.